Well, the number is in. The Bank of Canada just announced its interest rate decision. Why don't I send that over to you? CBC business reporter Scott Peterson watching closely. I'm getting that sense. Scott, what is it?
It is a whopper. I've never seen this before, and I'd have to check the records, but it's up 100 basis points. That means the overnight interest rate by the Bank of Canada is up to 2.5%. That's beyond the 75 basis point that we were expecting. And a 75-point rise would be the highest going back to 1998. So that predates that. So this is really a red flag now by the Bank of Canada, saying that they are very serious about rising inflation in the country, and a 100 basis point rise by the Bank of Canada overnight. Now the backdrop here is we're at 40-year high inflation rates. 7.7% is Canada's inflation rate, and that's the highest it's been going back all the way to 1983. And that's significant because back then we saw mortgage rates nearing 20%. And so the Bank of Canada clearly taking this as an indication that it has to move aggressively against that inflation rate. So a big surprise, 100 basis point rise, 2.5%, our new overnight interest rate, Suhana. And I should mention as well, that's the rate that the banks borrow at. So that's increased automatically, and that will hit variable rates immediately, and eventually a lot of other rates as well, fixed mortgage rates, line of credit, car loans, etc. So a big announcement from the Bank of Canada just this moment.
And I know we're watching for a news conference. That's set for about 11 Eastern, so in an hour. We'll get the why behind this 1% hike. What will you be listening for, Scott?
Certainly there's going to be a lot of questions for Tiff Macklem, the Bank of Canada governor, as far as is he moving fast enough? Is he behind the curve? And more importantly, and most importantly, how high does he think this rate is going to go? Is it going to be 3%? He's indicated it could go over 3%, 3.5%. A lot of economists think by the year end. So that's all important, particularly for people that are already stretched with their mortgages, watching very closely the language as far as how high he thinks the rate's going to go. So a big surprise already from the Bank of Canada.
We will talk again. Thank you, Scott.
Sounds good.
For reaction, our Chase team has reached Kevin Page in Ottawa. He is a former parliamentary budget officer, also president and CEO of the Institute of Fiscal Studies and Democracy at the University of Ottawa. Kevin, you've been on the program before. Always great to have you back on. Tell me, 100 basis points, 1 full percent. Did that shock you?
Yeah, it's a shocker. It's I think a lot of people in the market, Suhana, were thinking 75 basis points. Even at 75 basis points, that would have been a big increment. We've seen previous increments at 50 basis points. So actually, to go to a full percentage point, it's a bit of a shocker. But there were people thinking out there. There's people thinking in the United States we might see something similar, a full 100 basis point increase in their policy rate as well.
We're talking about inflation being one of the things that's causing this full percentage hike. In Canada, apparently the Bank of Canada expects it to remain about 8%. We're getting the overnight inflation in the U.S. at 9%. So does that calm the fears of rising inflation, the bank being so aggressive?
Yeah, the bank is definitely being aggressive. I think even at 2.5%, that's the policy rate today. It's still, considered to be, relatively accommodative or low relative to what a trend would be. It would, even if we had inflation in the 1% to 3% range, the bank would be comfortable of having a policy rate of about 3%. So it's still an accommodative interest rate, but it's a very big increase from where when we were having these conversations earlier in the year. It's a much aggressive stance with respect to the, how they're looking at inflation right now.
People who bought houses when the interest rates were, like 1.25%, perhaps even less in some cases, what do you think they're doing right now?
Yeah, I think the housing market is probably really the area that we need to be most concerned about. There's a lot of talk about a soft landing in this environment for the economy, raising interest rates, trying to cool the economy, try to change the arc on these rising inflation rates. But yeah, right now for mortgage, for people that have bought a house over the past couple of years, their big concern is to see month-to-month declines in housing prices. These increases in mortgage rates, of 100 basis points, it's hundreds and hundreds of dollars per month for people that are carrying a mortgage of $500,000. So it's definitely the big concern. I think the bank probably got it wrong with respect to in 2021, we started to see these big increases in inflation rates. I think now we need to be a little bit concerned that the bank, needs to be worried about the risk in terms of the housing market, because we don't want to really, trick a bubble that potentially could be there in the housing market.
One of the things we always have been watching here here at CBC News Network is China's economy. I mean, they're fighting outbreaks of COVID-19. We've been looking at the war in Ukraine, oil prices being high and also being volatile. How does all of that fit into global economic growth and where Canada stands with its growth?
Yeah, so I mean, I think expectations for global growth are certainly coming down for this year and for next year because of COVID in China. I think because of energy-related supply issues in Europe, just in this massive amount of uncertainty, and we see central banks attacking inflation really across the world. So this is going to slow growth in Canada. Those economic projections that underpin budget 2022 were far too optimistic. And yeah, so I think people are. Finance ministers, central bankers were adjusting to a slower growth environment. And you start to see some flattening in terms of global commodity prices, because now people are factoring in the possibility of a recession.
And let's talk about that. I mean, last week, Kevin, economists with RBC predicted Canada is headed towards a moderate recession. What do you make of that projection?
Yeah, I think, again, we can't, this isn't an assumption of where we might be. I mean, it's clear that when we get the announcement, as we did today from the governor of the Bank of Canada, that they're attacking inflation. They're raising interest rates dramatically. As Scott alluded to, we haven't seen this kind of upward, increase in interest rates in modern history. So again, it's almost a planned induced kind of slowdown in the economy. Again, we hope that it can be soft, so we won't see significant declines in output, significant increases in employment, which would be, I think, difficult for all countries and certainly our political leaders.
And finally, Kevin, we've been talking doom and gloom. As you say, people who have variable rate mortgages, they're probably just wondering, what the heck am I going to do now? People who have lines of credit, who have debt, who benefits now? Where is the upside?
Well, I think the upside, like Suhan, is you can't actually see, and if one combs the data, you don't actually see signs of a recession anywhere. You see a strong labor market. You see, when we look at business outlooks type of surveys, they see future sales growth dampening somewhat, but still strong growth. Businesses intending to invest. So honestly, the recession is something it's really could be many months, many quarters kind of down the road. So again, as long as the labor market stays strong, we could find a way to pay these sorts of bills. We can avoid kind of this sort of month to month or quarter to quarter declines in output, increases in employment. So again, there is some positive that we're still sitting on a relatively strong economy. And when we look at household saving rates, business saving rates, they're pretty strong.
All right, there is some light at the end of the tunnel then, and it isn't a train rushing towards us. Kevin, always great to have you on the program. You be well, okay?
Good to be with you, Suhanna.
Kevin Page is a former parliamentary budget officer. He's also president and CEO of the Institute of Fiscal Studies and Democracy at the University of Ottawa.